What does that mean, betting on platforms? I assume you don't mean shoes.
Correct. By platforms, we basically define it as the more customers a business has, that results in incremental marginal utility or time savings to the customer. So the bigger the customers, the better the experience or service. You can think about a company like Amazon, more suppliers, better experience for customers. Apple, more developers. And on the smaller side, a company like Snowflake, the more customers that are on there, the more data and the more insights those customers are able to glean. Converse that to a services company like DocuSign. These kind of companies, they go off on trying to get as much market share as possible, but at the end of the day, their ultimate differentiator is price. So that's how we're distinguishing kind of where we go within tech.
Well,
but obviously, there's a much broader macro.
Well, on a broader macro basis, James, stocks, pretty much all of them just keep going down, not every day, but it feels like close to it right now. Before we get into sort of certain platform-esque ideas, can the broader tech sector recover until interest rates stop going up?
Yeah, we think so. I mean, there's absolutely every reason to continue to be optimistic and bullish in terms of, these services are inherently deflationary. So the world is going to continue to go in that direction, especially dealing with the kind of CPI numbers that we've been dealing with. But ultimately, I do think right now with tech, as we're doing, you do have to take a more defensive posture. You have to lower duration, go up balance sheet, and invest in those companies with the best visibility into earnings and cash flow. And ultimately, ideally, also have a secular tailwind to them. So we're in uncharted territory right now. I mean, if you look at the Fed raising rates, if you've had historically over a 200% increase in rates, that's resulted in a deep recession. If Powell goes forward with 150 basis points potentially by the end of the year, that's over a 5,000% increase in rates. So, we're in uncharted territory right now. So, we're taking a defensive posture and also being much more tactical.
Is it a good example, and looking at some of the companies that you own and that you sort of talk about, would a good example for our viewers and listeners be of a platform be an Airbnb? I mean, I don't know about you.
Yes.
When I look to travel with my family, sometimes I bring my dogs. I don't go to a hotel website anymore. I go to Airbnb. I'm not giving them a plug. I'm just simply saying it doesn't appear they have a lot of competition.
Yeah, exactly. I mean, it comes back to the definition. Does more users equal a better experience? In this case with Airbnb, it is a platform because the more supply you have, the better experience it will be for customers. So absolutely, it fits that definition, and it's a stock that we own. Are we going all in on it as our biggest position? No, because we are decreasing duration. But it's one that, if you can stomach the volatility, it will prosper over the long term, and we're still very bullish on it.
James Cakmak, Clockwise Capital, looking at the platforms, the Airbnbs of the world. James, thank you.